Welcome to Grounds for Discussion
and Title Talk,
where we bring together closing, processing, real estate,
and coffee, of course.
Whether you're a buyer, seller, agent, or fellow industry professional, join us as we unpack the processes that make real estate deals happen. Hi, I'm Jennifer.
And I'm Barbie.
And today we have the beautiful and professional knower of all loans, Leah Young.
Wowza.
Welcome.
Thank you. Thank you for having me.
So tell us a little bit about yourself. Tell us about how long you've been doing this, how long you've been in the area, just a little tidbit about you.
Well, I grew up in the Ozarks. I'm from Crane. I've been in Springfield for 20 years. I started in real estate. I got my license 20 years ago. So that was really my background.
Okay.
And about, I came to Central Bank 5 years ago in March. So I've been at Central Bank for 5 years. I've been a mortgage lender for 5 years now. And I started right during COVID, whenever rates.
Really?
Yes, I was a Central Bank COVID baby.
So you were drinking from the fire hose.
I was drinking from the fire hose. Yeah,
Yes.
I was just supposed to train for 6 months, and my boss was
COVID.
nope. He goes,
Like,
you know,
and go.
yes, exactly. He said, okay, you know a little bit more than I
know
thought
enough.
you did. So here's a refinance. Come see me if you need me. And
Oh my
he still
gosh.
says to this day, I thought any day now Leah is
She's
going to
quitting.
quit. She's not going to come back. You know, we've barely been able to train her, and rates were 2.5%.
Crazy.
So
Yeah.
I learned on refinances very quickly.
I bet you did.
Very cool.
I bet
Very
you
cool. Well, what did you bring us to drink today? It looks really fun.
I brought you ladies a sweet and salty blondie from Seven Brew.
Okay.
Iced.
All right.
Yes.
Iced. Here we go.
Iced.
Cheers.
Cheers.
Cheers. Cheers to you.
I already know I like it.
Okay. That's really good.
It is good.
It's a dessert.
It's
it's
definitely good. It's like almost like a.
My husband calls
Chocolate.
it a candy bar in a cup.
It is. I love that. A candy bar in a cup. It really is.
I think it's white chocolate
Okay.
with a little bit of salted caramel.
Okay.
It's probably no calories, no sugar.
Oh, yeah.
Probably all
Zero.
the good things.
Zero, as you can tell by its
Yeah.
creamy
Yeah,
It's
appearance.
creaminess.
Yeah.
Yes. So we have all the questions, Barbie and I do.
Great.
So one of the first questions is, how quickly do buyers need to get a pre-approval? Do they need to get pre-approval? Like, how does that work? Like, you have somebody coming to you, I'm thinking about buying a house in a couple of months.
During COVID, it was crucial to do the pre-approval. Are we seeing that quite as much, or?
Yeah, there are still multiple offer situations, and I always tell everybody, before you go looking at homes, start with your lender first. You don't have to be pre-approved for a month before you go find your home
Right.
or a specific time, but just knowing what your budget is before you
Yeah,
write an
that's a good
offer on a
point.
home is really most
So
important.
if you're going to look at $500,000 houses because you think that's what you
What you
want,
can
and
afford.
then you call your lender and
Exactly.
you look at $250,000 houses, you're going to be a little bit disappointed.
Yes, yeah, and you're wasting, your
You're
real
wasting
estate
time.
agent's
Yeah.
time and the seller's times, and
And then when
it's-
that payment, you kind of see what that payment's going to look at
You're
like,
like,
and you're like,
Oh, what was I
no.
thinking?
There's
Yeah.
a lot of
Yeah.
sticker shock going on right now,
Oh, yeah.
especially with the rate
Yeah.
economy right now, and it's just a little.
What are
Yeah.
you seeing with the rates? Like, what's the word on the street?
It's very volatile every day. We don't know what we're going to get into. For instance, this morning they were flat from how the market ended yesterday, but while I was at lunch, I got an email saying that they're going to get worse. So you got 5 minutes to lock your rates in. So
boy.
it can create chaos. And,
Yeah.
and I might quote somebody something at 10 o'clock and it could change by noon. So
okay.
yeah, and if you're not locked in, you're still out there, and it can go up or down at any moment until you're actually
Yeah.
locked in.
But I feel like they're not, like after COVID, we really saw a drastic swing in interest rates, and they got up there pretty good. I don't feel like they're quite there anymore. They've come back down a little bit, a hair.
Some days.
Yeah,
I mean,
some days, yes. They're hovering, and they've hovered since 2023 in the mid to high sixes. I mean, there were days last week whenever the market was going crazy that I was quoting people in the sevens,
Yeah.
And it definitely depends on
Super.
what their down payment is, what loan program they're getting. If they're a first-time home buyer, sometimes they can get a better rate than,
Yeah.
the second time around. So rates right now they're in the sixes.
Okay.
That's what I would tell somebody is
Yeah.
they're
And
it
fluctuating.
depends on,
in
and
the-
tomorrow
And
it could be up or down.
And really, sixes aren't bad.
No,
they're
Because
not.
I think people have the misconception, and maybe you know this, is they think, oh, it's going to go back down to 3 or 4, and you're like, no.
Yeah, I hope so. I remember in 2013, when I was selling real estate, my buyers were getting 3% and 3.5% interest, which was great.
Yeah.
And they were, between 2013 till COVID and 2020, they were around 4 or 5%, and they just went. I don't think we'll ever see them in the twos again.
Yes,
But
yes.
the threes and the fours are not
Could
unheard
possibly.
of. They
Yeah.
had been there before, and I would love for them to go down again. In the threes
Speaking
and
of
fours.
pre-approval,
Yes.
one of the things that's out there, and I think that we would love for you to clear this up, what is the difference between a pre-approval and a pre-qualification?
So if a borrower comes to me and they say, what we do at Central Bank for the most part is a pre-qualification. So I'm going to take an application, I'm going to review their credit, review their income and job history. That is, and I'll run it through our automated underwriting system. If everything looks good to the system and to me, then I will give them a pre-qualification letter that says, based on the information that I have right now.
That you've given me, you've
Yes.
provided for me. Yeah.
Yes, and things can go crazy once they're under contract with title work, as you know, or an appraisal, and so things change once you find the actual home. So that would be a pre-qualification.
Okay.
Now, if somebody comes to me and says, I want to get pre-approved, then I would send their actual file onto an underwriter to have them actually underwrite their income to make sure that
There's no
what
credit
I'm
checks.
seeing in how I'm calculating it matches what the underwriter's going to do once they're actually under contract.
Okay.
For the most part, most borrowers are just looking for a pre-qualification.
To know where to start.
Yeah. And, most sellers are okay with a pre-qualification
Yeah.
letter. Now, for some reason, if a seller says, I wanted them to be pre-approved, they may, one, not know that there's a difference, or they may not know that there's really not that much of a difference.
Yes.
So, for instance, if you've got a self-employed borrower that has multiple businesses, I would sometimes I'll do the income calculation on my end and then send it on to an underwriter just to have them verify. And then I would say, well, they're basically pre-qualified and pre-approved at that point because the underwriters looked at their income. But we've always got to underwrite the appraisal. We've always got to underwrite the title work and everything too. So it's not over till it's over, even if you do have a pre-approval.
Right.
Yeah.
Right.
Yeah. So so when you're purchasing a house, we always talk about your credit score.
Yes.
So what is considered a good credit score? What is considered like you can still get a loan?
Is there a
and,
baseline?
And is there a baseline that you're kind of like, okay, I'm sitting at this, I can get a house, or I'm sitting at this and I ain't getting a house?
That's a great question because we have so many different loan programs that, if you're looking at conventional, rule of thumb is 680 and above, you're going to be okay with the conventional loan. I can do a conventional loan if you have a credit score, a mid score that's under 680, if they've maybe got more of a down payment or they've got more reserves, and so it is really an algorithm of a lot of things, and it's not just credit based. I could probably get a borrower pre-approved with a 660 that has a 30% debt to income ratio easier than I could with a borrower get it with a 660 mid score that's got a 45 or 50% debt to income ratio. So there are a lot of different factors that come into it, but rule of thumb, conventional 680-ish, FHA and VA, we have some investors that will go down to 580. Doesn't mean that just because you have a 580 mid score that you're going to get approved for that loan.
Right.
But we can work with it all.
Yeah.
So what would be a common red flag you're seeing when you go to pull someone's, credit and it's like, oh, that's, what's a red flag?
Yeah. right now, their medical collections are really not supposed to be an issue. We don't take that into effect as far as, it's probably going to hurt their credit scores if they have any collections, whether they're medical or, AT&T. We see that all the time. So any collections that are on there, your credit does take a hit. But I would say any collections over $2,000 that are not medical, those are going to have to be paid off or on a payment plan.
But it wouldn't keep you from getting a loan. You're just going to have a requirement.
Yes, correct, yes. Another red flag would be somebody who has not been on their job for very long and their hours vary. That's kind of a issue that we're running into right now, especially with an FHA loan. A nurse, they are full-time, but 1 week they work 36 hours and 1 week they may, so
40,
and so if we are ordering a verification of employment and they say, you're full-time, but your hours fluctuate or their
From week to
income
week.
varies. If they haven't been on that job for 2 years, that
that's what I
can
was gonna
cause
ask,
an
like,
issue.
What is that? What is that baseline?
Yeah.
It's 2 years.
Yeah. So we have to take an average of the 2 years at that point. And if you don't have the 2-year average, then sometimes we can't make it work. So that would be kind of a red flag. Or somebody who is newly self-employed and they don't have 2 years of tax returns. We have to take an average of the 2 years for the most part. So the 2-year thing is kind of a red flag if they haven't been there yet. And they're not on a salary. If they're on a salary, it's a lot easier to get a loan.
Even if they've only been there 6 months or
Correct,
whatever.
yeah.
Because you know what it's going to be.
Yes.
Yeah.
Yeah. So then the other question is, kind of going off what you're talking about is, I want to buy a house. I don't have a lot of credit. I have, maybe 1 or 2 little credit cards that I pay monthly. I don't have a lot of debts. I am new to this, but in my mind, I'm thinking I can't get a home loan. What harm would it be to come to you and say, Leah, I don't make a lot of money. I'd like to buy a house. What should I do? Like, what should I do to help my credit to be able to buy a house?
No harm at all. You got to start somewhere. I always tell people, even if you think you've got bad credit or you're hung up on something, let's just sit down and look at it and see, because for one, we might have something that works, or it may not be as bad as what you think it is.
That's what I was wondering. Sometimes we make up in our head what we decided is a deal breaker, and from what I hear you saying, there are so many factors that go into what can make something work.
There are, yes, and for the most part, I don't say no. It's just maybe not right now, or we're going to have to do this, or pay this off, and we can do a rescore. So we have a system that I literally could say, if I want their scores to go up to 680, what do we need to do? And it'll say, pay this credit card down to this, literally the dollar amount. And then once they do it, we send it to them and they rescore. Now, it's not going to say 100% that your scores will go to this, but it's an estimate. And most of the time, it's pretty accurate.
That's really cool.
Yeah. So people, especially first-time homebuyers, are so nervous to get denied. They come in there and they're just, when I say, can I pull your credit? They're like, and you could just tell they're anxious about it. But when you
say pull your credit, like if someone was going to shop rates, and you pull someone's credit, am I right or wrong? Is there a thing called a soft pull where it doesn't hit it every single time, or is that not a thing?
Yeah, there are banks that do soft pulls. I typically just do the tri-merge credit report. I know there are some people that call me and say, can you just do a soft pull? Technically, I don't think that whenever you have your credit pulled for mortgage purposes that it's going to hurt your credit. So I try to tell people, don't be worried about me pulling your credit. Now, what I would tell you that will hurt your credit is if you go up the road and buy a car and they send your application to 8 different banks. We see it all the time, and they all pull your credit. That's what's going to really
makes sense.
So shopping mortgages and a mortgage company, you guys are not. It's not. You're not going to see a pull on their credit as like, oh man.
It shouldn't affect it
That
like
much.
it,
Okay.
yes, yeah. Now, I think mortgage is just a little bit more inclusive to, we want to show you exactly what your credit looks like, and people are just so nervous about what their scores are going to go down to when you pull it. I'm like, well, how do you know what your score is right now anyway? Right. Yeah, like, because if you're looking at Credit Karma, that's a monitoring system, but it's not accurate. I've never had anybody say, hey, I've got a 700, and then I pull it and they've got a 700. I mean, it's always different.
Right.
But normally when I'm pulling your credit, it's just a snapshot of everything. I get all three trade lines or all three scores if they have them. I see all their trade lines, and it shouldn't hurt. And then if they go up the road and within a certain time frame, they should get about the same scores as well.
Good. So let me ask you this, because this happened to my kids. No credit. They were adamant. No credit cards. No car payments, no, all they had
Which
was
is great.
rent. It is great, but they have a hard time getting a house. So what would be your advice to younger or not younger adults who have really put a lot of pride into not going into debt, but they want to buy a house?
Okay, so for one, we do have options for no scores.
Okay.
And the other thing that I see people do is just, you can get what's called the prepaid credit card. That's your money.
Okay.
So at Central Bank, you could go in, and I think you can start it up with as little as $200. You give them $200. Now you have a credit card. We do report that to their credit.
Okay.
So they don't feel like they're going into debt because it's their own money, but they are still able
They
to.
can go get gas or
Exactly.
groceries.
That is
on a card.
amazing.
Okay.
Yes. That's what I tell people to do a lot, is
Yeah.
just get a prepaid credit card if you're worried about debt. Also, I do see people do the self-reporting. I
Never
don't.
heard of that.
Yeah, so it costs them money each month, but if you have a cell phone bill or Netflix or a trash bill, I don't know all the logistics on how it works and how they do it, but they can report those bills that aren't necessarily debts to your credit to show.
But it's a revolving payment that they make, and that's how
It just shows the credit history and the payment history. Yeah.
Yeah.
So that I have seen people do and get some scores through that. And then those payments on their credit report, since they're not technically debts, they're just reporting to show the payment history, don't count as debts against them
That's
like
really
anything
cool.
else would on their credit report.
So I saw a situation actually with my parents. My parents paid for everything. They had one credit card. My dad's name was on it. My mom's name wasn't on it. Her name was on the house, but they had it paid off. So she had no credit whatsoever. And mind you, he had probably the best credit score you could have.
And she had none.
She had
Zero.
none. So then when she sold and had to start looking for a credit card or buy a car or a house, it was an issue.
challenge.
It was a challenge, even though she had all this money sitting in the bank account and her savings.
Man down.
Man down. She's been giving me a hard time all day. It really was an issue for her to get loans. Like it was, even though, like I said, in CDs and all this kind of stuff, she had all this money, but because she had no credit score.
And what I tell people, especially if they're married and your dad had a credit card, just add her as an authorized user.
Yeah.
And that will also build some credit.
Yeah.
I've heard that with kids too. Like if you add, what's your thoughts about adding a child or a young adult, teenager to your?
As long as you're not racking it up and leaving at a high balance
Oh,
every month, then it's
it could
great.
hurt.
Yes,
it's not gonna, that'll backfire.
The rule of thumb is if you have a credit card limit to keep the balance under 30%. And when you get up over that month over month, it can actually pull your scores down.
Okay.
But definitely it's a positive if you have somebody, don't give them the credit card,
Right.
just say I'm adding you as an authorized user to build some credit. Now, I have ran into a specific type of loan that the borrower only had authorized user accounts, and the loan that I was doing that wasn't working because he couldn't prove that he actually had acquired his own credit. So it can help build credit, but I would always say make sure you have your own.
Yeah.
Because if that borrower cannot prove that they've made the payments for the last 12 or 24 months, then sometimes depending on the loan product, it's going to help that you've got the score, but it's not going to help that you've got the history.
Yeah. So for example, my son and I have have a credit card together. I'm the primary. He's an authorized signer, all that kind of stuff. He actually, it's his card. He pays for it every month, pays it off. He uses it for rent or maybe to go to Qdoba. And so he pays it off every month, but he's an authorized, and it's showing that that money is coming from his account.
Then that would have helped my borrower in the situation that he could prove that he was making the payment. Yes.
So I guess
So then that's a valid score for him because he's making the payment on his own.
Yeah.
So that would be fine.
And it's kind of nice. I can look and make sure it's being paid off.
Yeah.
Yeah, you can monitor.
A little way to track him. Yeah.
Yes.
What's he got going on?
I hope he doesn't watch this.
Where are you spending your money, son?
Exactly.
Well, what are your final thoughts for us? Tell us, we talked a lot about credit score, but is there anything that you would love for your audience, the people that might call you, to know about you and your programs at Central Bank?
Well, I will say that a lot of people think that banks have a stigma that they're only going to deal with the 680, 20% down, conventional borrower. That's not the case. Central Bank has every loan and then some. So we have our own portfolio loans that we can do for, depending on if you're a first-time home buyer, or if you are a hero loan, which would be a teacher, or a first responder, or a firefighter, law enforcement. We do specific loans for them that are 100% with no PMI. And what PMI is private mortgage insurance that the lender would take out on you if you don't put 20% down. So that's nice with a 100% loan to not have
that
PMI.
Is nice.
So
that can get you quite a bit of money.
Yeah.
So clarifying, the hero loan is no PMI? Is that
with Central Bank?
With
yes.
Central Bank?
Yeah, and it will go up to 100%.
Wow.
Yeah.
Wow.
So
Did y'all hear
teachers.
that? That's huge.
Yeah.
It's huge.
So teachers, firefighters, law enforcement,
First responders.
EMTs.
That's awesome.
No PMI. That's a big deal.
Yes.
I learned something about Central Bank.
So we have our own loan products, and
Yes.
we do all of the loans. We do them all. We do a lot of MHDC loans for first-time home buyers, and that's a down payment assistant program if you need it. If not, you get it even better rate if you have your own down payment. So I just think that what people, especially first-time home buyers, need to know is that you don't have to have perfect credit and you don't have to have 20% down.
Yeah. Right.
So
and it's a phone call to get.
Yes.
You don't know what you don't know.
Yeah.
So
Yes.
make the call.
Yes.
Make the call before you fall in love with the home. And, yeah. I don't want to be, the dream crusher and say, this is not going to work. But, sometimes it's nice to motivate them by showing a home as well. So I understand that. And, but we want everybody, not just Central Bank clients. We want you to come and get a loan and then bank with us, get your home loan with us. We could do, we do land-only loans, we do new construction loans, we do it all. We're a one-stop shop.
You really do. Awesome. So when I said knowledgeable,
You did.
I
meant it.
on point.
You weren't just talking me
I
up.
wasn't just building you up, girl.
I could sit here all day long.
I don't want to go back to the office. I don't have anywhere to be.
We can sit and drink our cinnamon brew all
Yes,
day.
coffee. Should.
Well, thank you so much for joining us
Thank
today. It
you.
was really, really great.
My
to have
pleasure.
you.
Thank you
Yeah.
for having me.
So I know you're busy, so to pop over here was a big deal. So thank you.
I enjoyed it. Thank you for having me.
Thank you.
Thank
See you next
you.
time.
Bye.